All right, taking a look at some example problems from Chapter 8. We are working with petty cash and the cash account. Let's first look at this problem where a company examining their cash receipts information and the accounting department determined the following information. There was an opening cash balance of $150. Cash on hand is $1,125.74, and cash sales per the register tape are $990.83. So something's not adding up here. And this happens pretty frequently when change is just not given correctly or there's some type of, unfortunately, theft. But there was a beginning balance in cash of $150, and the cash on hand, let me actually do it this way. There was cash on hand of 1125.74, and the sales register tape showed 990.83 in sales. The difference between the cash on hand and the sales per the tape is $134.91. However, we started with $150 in cash in the beginning, so there should be $15.09 additional in that cash receipts. That means we were short by $15.09. So we're going to record the amount of cash collected, which is the difference between the cash on hand and the cash that was started with. So cash increased $975.74. The amount of sales per the sales register tape was $990.83. We were $15.09 short. So we need to record that shortage somewhere. And so we have an account called Cash Over and Short. And we can really honestly debit or credit this account with whatever we need. When we are in a situation like this, where we were short on cash, we will be debiting that account. And an account like that with a debit balance acts as an expense. It's an additional expense that we incurred to accept cash sales. If we were in a situation where this had been an overage, in other words, there was more cash in the drawer than what we expected, then we would end up crediting that account, and it would act like an additional revenue. Using the same concept dealing with cash overages and shortages, let's look at a petty cash fund scenario where this company established a petty cash fund on the 1st of August. So on the 1st of August, they are taking cash out of the main cash account, essentially taking cash out of the bank and putting it into, for lack of a better vision, a petty cash lockbox. So some type of secure box or pouch that's kept on the premises. So we need to show in the general ledger that some of the cash has been taken out of the bank and it's now in a petty cash lock box or lock envelope. So we will, in the general ledger, essentially move $100 out of the main cash account, decreasing cash 100, and we will put it into a different cash account in the general ledger titled petty cash. So the only thing this journal entry is doing is transferring cash between two different cash asset accounts, increasing the petty cash, decreasing the main cash. At the end of August, this fund had $9 cash remaining and petty cash receipts for postage of $31, office supplies of $42, and miscellaneous expense of $16. Let's prepare the journal entry to replenish that fund at the end of August. So that $100 in cash sitting in the petty cash fund was used to pay these expenses during the month. Two things need to happen here. First, we need to do is to figure out how much cash we need to put into the fund to replenish it. So the first thing we need to do is figure out how much cash is missing. It looks like there was $9 cash remaining in that fund. So we need to get it back up to 100. So we need 100. 9 is currently in there. We need to replenish $91 to get it back up to the $100 balance. So we will take $91 out of the bank to replenish the fund. The second thing we need to do is record all these expenses. petty cash was used to pay these expenses, but these expenses haven't been recorded in the general ledger yet. So we will debit postage expense for the cost of postage that was paid with the fund. We will debit office supplies for the $42 in office supplies purchased. We will debit miscellaneous expense for the $16 miscellaneous expense paid by the fund. At this point, if I were to add up all of the debits to the expense account, I would see that the expenses total, let's add these up, $89. So the expenses were $89, but the amount of cash that had been used or is missing from the fund is $91. More cash was used than expenses that were paid. That means we are short $2. So we need to account for that shortage. We will debit this journal entry to make it balance because it needs $2 additional debits to make it balance. And that shortage is recorded into that cash over and short. Remember, that is simply a plug account. If it's debited, it acts as an expense. If it's credited, it would act as a revenue. All right, taking a look at the next problem. Anna is unable to reconcile the bank balance of January 31st. Anna's reconciliation is as follows. So here's her reconciliation. Here is the adjusted balance per the bank, and here is the adjusted balance per the books. Those two numbers do not agree. In order to show that we have reconciled, those two balances need to be one and the same. So let's take a look at what she did wrong. If we're looking at this, the cash balance per the bank, she has added an insufficient fund check here. An insufficient fund check means a check bounced. The bank already knows that the check bounced because they were the ones that figured out that the funds weren't there. So first of all, this is on the wrong side of the reconciliation because the bank already knows about the insufficient fund check. That insufficient fund check should be on the book side of the reconciliation. And because the books had recorded a deposit when it really wasn't received, we need to decrease the balance per the books for the amount of the insufficient fund check. Okay, when we received the check from the customer, we increased cash in the general ledger. When we went to get the money or the bank went to cash that check, the funds weren't there. So we need to subtract it out of the book balance to adjust for the fact that that cash really was not received. All right, looking at the next item, the cash balance for the bank is showing a bank service charge being subtracted. But that doesn't appear on the right side or on the correct side of the reconciliation either, because this service charge has already been deducted from that bank balance. It has not been deducted from the book balance yet. It hadn't been recorded on the books because the general ledger wasn't aware. We weren't aware to record that service charge in the general ledger until we got the bank statement. So this is on the wrong side of the reconciliation. It should be on the book side of the reconciliation. It should be a subtraction from the book balance, because now that we know that that service charge occurred, it needs to be subtracted. All right, let's see what else she did over here. So here we're seeing deposits and transits being subtracted from the book side of the reconciliation. However, deposits in transit means the company has deposited the money or the checks, but it hasn't yet been recorded by the bank. That $530, when it was deposited, was already recorded into the general ledger. It's also on the wrong side of the reconciliation. So we need to move those deposits in transit up to the bank side of the reconciliation. And we need to show it as an increase, because once the bank processes those deposits, they will add it to the balance they have recorded. Finally, it looks like there's outstanding checks here on the book side of the reconciliation. Again, on the wrong side of the reconciliation. Outstanding checks are checks that the company wrote. When the company wrote those checks to pay for supplies or some purchase, they decrease the balance in the books. That $930 of outstanding checks means the bank hasn't yet processed those checks. So the $930 hasn't been subtracted from the bank balance yet. Once the bank finds out that those checks occurred, those will be deducted from the bank balance. So it needs to be reported on the bank side of the reconciliation. So now that we have these items on the correct side, we have increased and decreased the bank balance to get to an adjusted balance per the bank, and decreased the book balance to get it to an adjusted balance per the books. Now the reconciliation is correct because those two numbers agree. Last step that Anna would need to do to complete her reconciliation is to prepare the journal entries as a result of the reconciliation. Only items that still need to be recorded into the general ledger are the adjusting items on the book side. Nothing on the bank side of the reconciliation needs to be recorded into the general ledger because these are already recorded in the general ledger. These two are not because we hadn't been aware of them until the bank statement was received. So the easy part is, because we're dealing with cash, we know each adjusting entry will involve cash. It's even easier when we know that both of these are being subtracted from cash. That means we know that both of these are going to be credits to cash. So let's look at the first one. We are going to credit cash for $690 to subtract from the cash balance. And because this is an insufficient fund check, whatever customer had given it to us still owes us. So we are going to debit it into accounts receivable and go collect from the customer. The bank service charge of $25. We know we are crediting cash for $25 to decrease cash. And we're going to record it as some type of an expense. Bank service charge expense, bank fee expense, some kind of an expense. Okay. All right, let's take a look at this next problem. And this is going to have us working with identifying outstanding checks. So on the April 30th, the bank reconciliation of Galena Company shows 3 outstanding checks. Check number 240, 254, check 255, and check 257. So that was in April. The May bank statement and the May cash payments journal show the following. So during May, these were the checks that the bank processed. This came off of the bank statement. These are the checks paid. Let's take a look and see if any of the outstanding checks from April have cleared during May. So let's look for check 254. Here's check 254. It was paid in the amount of $650. That means that check has been processed. It is no longer outstanding. Check 255. Looking down here, I do not see check 255 on the bank statement. So check 255 must still be outstanding. It hasn't been processed. Okay. Check 257 for $410. Oh, there it shows up on the bank statement. So we know that that one is cleared as well. So far the only outstanding check that we are still aware of is check 255 in the amount of $820. Now let's see what other outstanding checks may have come about during the current month. So what I have over here is just the second part of this problem. This is the cash payments journal for the month of May, and these are the checks paid. So it looks like we had check 258 was issued in May per the cash payments journal. And look over here, it has processed. The bank has cleared it. So that is not outstanding. Check 259 was paid during May. Yep, it was cleared by the bank as well. Check 261 was issued during May, and it also cleared. Check 262 was issued during May, and yep, here's check 262. It cleared the bank, so it is not outstanding. Check 263 was issued during May, and it cleared the bank, so it is not outstanding. And check 264 I am not seeing check 264 on here. So we have now identified the 3 checks that are outstanding. 255 from April that still has not cleared. Check 260 written in May that has not cleared the bank. And check 264, which was written in May and it has not cleared the bank. So our total outstanding checks, $2,270. All right, let's try a little bit more involved bank reconciliation and hopefully pull all these concepts together. Wolverine's genetics company spreads herbicides for local farmers. On May 31st, the company's cash account in its general ledger showed the following balance. So general ledger, the book balance is 13,287. The bank statement that arrived for the May 31st balance in cash showed 13,332 in the bank. We are trying to figure out the difference. We're going to reconcile those two numbers. A comparison of the details on the bank statement with details in the cash account revealed the following facts. So the statement included a debit memo of $35 for the printing of additional company checks and additional items below. Let's go back and hit each of these one by one. Before we do that, let's get our bank reconciliation started. All right, so the very first thing we need to start our bank reconciliation are the 2 cash balances. So here is the cash balance from the bank, and here is the cash balance in the books or the general ledger. Okay, those came straight out of the problem over here. Hopefully this split screen will work for us. Okay, so we have those two. Now let's look at the reconciling items. The first one, the statement included a debit memo of $35 for the printing of an additional company checks. So the first thing we need to ask ourselves is which side has not recorded this debit memo? If this debit memo was included on the bank statement, the bank already has recorded it, which means the books have not recorded it yet. It is a charge, a debit memo of $35 for the printing of an additional company checks. All right, that means we need to show that as a decrease on the book side of the reconciliation. Okay, because we didn't know about it, we haven't recorded it in the books yet. Next, cash sales of $1,720 on May 12th were deposited in the bank. The cash receipts journal entry and the deposit slip were incorrectly made for $1,820. The bank credited Wolverine Genetics Company for the correct amount. So $1,720 was deposited in the bank. When we recorded it into the general ledger, we incorrectly recorded it for $1,820. That means the books have not corrected that error yet. We need to record this error as an adjustment on the book side. There was a $100 error. We recorded the deposit for $1,820. The deposit should have been recorded for $1,720. We recorded too much of a deposit. We increased cash too much. So we need to decrease $100 from the book portion of the reconciliation. All right, next item. Outstanding checks at May 31st total $1,225, and deposits in transit were $2,100. Outstanding checks mean the company has issued and recorded them, the bank hasn't processed. Deposits in transit means the company recorded the deposit, the bank hasn't processed, which means both of these have not yet been recorded on the bank side, so both of these items will be on the bank side of the reconciliation. So here is the bank side of the reconciliation. Deposit in transit needs to be added to the bank balance, so that will be shown as an add. Outstanding checks need to be subtracted from the bank balance, so those will be shown as a less or a subtraction. On May 18th, The company issued check number 1181 for $911 to G. Fisher on account. The check cleared the bank in May. It was incorrectly journalized, recorded in the general ledger, and posted by the company for 119. The check should have been recorded for 911. It was recorded for 119. Error has not been corrected on the book side of the reconciliation. The bank properly processed it for 911. That means that when we recorded this into the general ledger, it should have been recorded for 911. It was only recorded for 119. We didn't decrease cash enough. We should have decreased cash another $792. So we are going to show this on the book side of the reconciliation. We need to decrease or subtract from cash an additional $792 to correct that error. Number 5, a $4,000 note receivable was collected by the bank for the company on May 31st, plus another $80 in interest was collected. The bank then charged a collection fee of $25. No interest has been accrued on the note. Okay, so $4,000 plus another $80 was collected by the bank for the company. The bank withheld $25 as their collection fee. This collection has already been recorded by the bank. The book hasn't recorded this collection yet. So we know we're going to be on the book side of the reconciliation. The books need to be increased for this collection. $4,080 was collected, but $25 was withheld by the bank. So the cash to be increased is $4,055. Okay, finally, included with the canceled checks was a check issued by a car company to Henry Ford for $900, but that check was incorrectly charged to our company, Wolverine Company, by the bank. So this error is on the bank side and it has not been corrected by the bank. Once the bank is informed of this, they will correct the error. We need to be on the bank side of the reconciliation since the bank has not recorded it. And that error needs to be added back in the amount of $900 to the bank balance. All right, we have gone through all of these reconciling items that were identified. Our next job is going to be to complete this reconciliation. We now take beginning balance per the bank, add and subtract the reconciling items to get to an adjusted balance per the bank. We do the same thing with the books. Beginning balance per the books, plus and minus all of these reconciling items to get to an adjusted cash balance per the books. Keep your fingers crossed that the adjusted balance per the bank equals the adjusted balance per the books. If those two agree, then we have reconciled and explained the difference between the two. One last step needs to be taken to complete the reconciliation. And that step is to prepare adjusting entries for items that need to be recorded in the general ledger. At this point, we can ignore everything on the bank side of the reconciliation. These items are all properly recorded into the general ledger. It's just stuff that needs to be cleared up on the bank side. Our job will be to only record reconciling items on the book side of the reconciliation. All right? So we're going to go one by one through these items. First one, there was a note receivable collected. We know we are adding to the cash account. So we know this adjusting entry will involve a debit to cash for $4,055. The reason we are increasing cash $4,055 is because a note receivable was collected. If the asset was collected, it's no longer a receivable and we need to decrease the notes receivable. So we are crediting notes for $4,000. We also recorded $80 or collected $80 in interest, so we get to record that as our interest revenue. And we need to also record a $25 expense for the bank fee. All right, the next item we need to record is an insufficient fund check. The customer had given us a check. We recorded the deposit as an increase to our cash account. When the bank went to clear it, it bounced. We didn't get that cash. That means we need to subtract it out of the cash account. So we know right away we are crediting cash to decrease it for 1308. And we are going to put that back into the customer's account because when they paid us, we decreased their account. They didn't really pay us. So now we need to go back and increase receivables and go collect it from the customer. Next item, there was an error in the May 12th deposit. Let's go back up to that May 12th so we have the details. We had recorded sales receipts incorrectly. We had recorded the sales $100 too much. So now we need to correct it. We know we are subtracting from cash in the amount of 100. So this journal entry will involve a credit to cash of $100. When we recorded it, we recorded too much in revenues, so we now need to decrease our revenues to correct our over recording by $100. Debit the revenue account to decrease it. Next item, there was an error in recording check number 1181. Check 1181 had been written to check to Fisher on account, so it must have been an account payable. And we incorrectly recorded it to little. We need to decrease cash more. So we know we're subtracting cash. So we're decreasing cash $792. And we also need to decrease our liabilities by $792. Because when we first recorded that payment, we only recorded it for $119, and it should have been a lot more. So we need to correct it by fully decreasing accounts payable and crediting cash. Finally, the last one, we have a check printing charge in the amount of $35. That check printing charge needs to be subtracted from cash, so we know we are crediting cash. And that bank printing charge is just simply a bank expense for us, so we will record it as some type of an expense. We can use miscellaneous expense to record it. Reach out if you have any questions.